Hey traders, Raghee here. Welcome to Charts and Coffee. Hope everyone's doing great. We are taking a look at this Friday. Of course, this is the rebalancing Friday, and we're simply waiting on, whatever kind of reaction we might get in terms of that magnificent 7 sell-off. And let's see here. Bear with me one moment. Yeah, so we're taking a look at in terms of what is going to be the reaction, mostly in the NASDAQ and in the QQQ. If you've been following any of the analysis, not to mention the trades that we're having in the, here we go. Hey, bot, if you're listening, yeah, the camera in the free training room is just taking forever to load. I'll be in there in a moment. So what we're trying to find here is whether or not the pullback that we had yesterday was the one that will complete that overall pullback to continuation, or is this really a topping pattern? So let's talk about that for a moment. If we're talking about potentially a topping pattern in the NASDAQ, let's talk about what kind of patterns those typically would be, and maybe what the follow through for something like that might be. All right, so this is the daily time frame of the NQ, and I got a lot of questions about Rog. Is this the end of the rally? And in my opinion, I will never pick a top in an uptrend, right? If we're looking for a ceiling, if we're looking for resistance, let it be where the markets are range bound and choppy, otherwise known as distribution, right? But once we have an uptrend, which, by the way, we've had in the NASDAQ since the very end of March, as you can tell here on the NASDAQ futures, I'm just going to expect that every pullback to maybe it's a 50% retracement, maybe it's the 34 EMA wave, maybe it's a daily price movement range or the 21 period, whatever it is that we use as that retracement or reversion, I'm going to expect continuation to new highs. And by the way, that's what we've got. So why pick a high now as opposed to a high in June, which clearly didn't work, or a high in July? Didn't work. What about the high in, May? Again, didn't work. So why don't we just go with which way things are moving, right? And then use the pullback as the opportunity to get long rather than thinking, oh, it's my job to get short. So I think the first job of any trader, and then my job to communicate to everybody, is be clear on direction, right? Nothing's worse than wishy-washy, bearish or bullish, we'll see what happens kind of thing. I'm bullish and I'll wait for a pullback. And it's really as simple as that. As long as XLK, XLC, XLY, Apple, Microsoft, Meta, Google, etc., as long as those names continue moving higher, we live in a high concentration world, and we'll continue to look for follow through in that upward direction. The other thing that I want to mention is yesterday I did a session in the training room, and it's also available. Yes, it is available. I'm looking at it right now at the Simpler Trading YouTube channel, and it was a NASDAQ rebalancing video. But I got not only into the rebalancing, but the implications, the effect of high concentration weighting, and also earnings on top of this rebalance. So if you want to check that out, it was a 30-minute presentation. And thanks already for those of you that have watched it and left a comment. Check it out maybe over the weekend, and we'll go from there. All right. So as always, gang, if you have any questions, let me know, and let's talk about this topping pattern. All right. So yesterday we did have a completion of a minor high. And as we broke down through essentially 179, we got down to this Darvas level. So this Darvas level here, this Darvas level's been taking advantage of the high that was at 176.30. Now remember, what was once resistance becomes support. Pretty interesting that, and it's going to be very important, that price get back above that level. And you can see that's pretty much exactly what we sold down to. Previous resistance became support, and I'll look for a continuation higher, right? And if I'm not going to see the continuation higher, and by the way, let me show you what the NASDAQ futures look like at the moment. If I don't see continuation higher, gang, that's why we keep stop losses, right? That's why we have those paper cuts. All right, so let's get to the question, shall we? Best part of the show. And first up is Matt, who asks, could I explain how to monitor the strength of the US dollar in relationship to other currencies? Also, how dollar strength or weakness affects the price of commodities like corn or the US market. Okay, so there's a lot to unpack there. Let me give you one place to start. So jump on over to the FinViz website, Matt, and you can check out the Forex link, and I would just look at the relative performance, right? Depending on your time frame. Are you looking at a day trade in the relative performance? Are you looking at maybe a swing? That's where you can toggle between daily, weekly, monthly. So that's the first thing I would say as far as the US dollar's relationship to other currencies. Look at a US dollar centric relative performance, and FinViz does that really, really well. The other part of your question, which was how does dollar strength affect the price of commodities? I would not consider dollar strength or weakness the main driver to whether I want to be bullish or bearish commodities. But as a general rule, a stronger dollar would be slightly bearish to commodities. A weaker dollar would be slightly bullish. But again, I would never place a trade with that as the justification for being long or short, right? But generally speaking, stocks like a weaker dollar, commodities like a weaker dollar, in terms of then making sure that you mentioned corn. At that point, I need to make sure that I circle back to corn and I have a legit standalone buying opportunity there. And the dollar is weakening. It's doing corn no favors, right? So let's not think there's a really high correlation. There's a tendency, but if you look at corn, corn's bearish, right? So that's where, obviously harvesting and output and USDA and WASDE reports are going to be far more important to corn and its general direction than, say, the dollar impact. But good stuff. I appreciate the question, Matt. All right. Next up, Dark Rival asks, why do I say friends don't let friends draw trend lines? I stopped drawing trend lines about a decade ago, maybe more at this point. They're exceedingly subjective. And I have found that unless, and by the way, I had an automated trend line tool that I used on eSignal. This is going back about, I used eSignal for about 17 or 20 years. And I found a coder, brilliant coder, who found the 4 elements of a trend line, automated it, and we could automate trend lines. There are 4 elements to it. Most traders just draw trend lines based on what they want out of the trade. I've watched it many times. There's too much bias, and it's incredibly subjective. So I don't do it. I don't recommend it. I will even say I'm that way with chart patterns. And the reason for that is, let's say we're looking at this view of the chart versus this view of the chart. There will be a whole different set of lines and levels that a trader would draw. So right away, there's a whole lot of subjectivity just based on how much data we have squeezed in on our screen. Immediately, we start to drop the probability that we're using levels that are necessarily going to be reaction levels, right? So bottom line is way too much subjectivity. I feel the same way about most chart patterns, which is why I advocate for using an automated type approach like the Darvis 2.0. I'm not drawing those. The system is. The system doesn't care if it wants to be long, short. It is what it is, I think is really important, right? As far as the mindset to automation. And the other part that I like to consider really important to automating is if I am going to use some sort of pattern, I use price patterns, not chart patterns. And you might say, well, what's the difference? Price patterns are the way in which open, high, low, and close interact. Everyone can agree upon open, high, low, close. But which touch point are we connecting the dots to becomes far more subjective. All right. Next up is any thoughts on Starbucks? Consumer discretionary, taking a look at Starbucks. It's one of those names that could benefit from the reweighting. Let's just look at it, kind of going back to Dark's question there. What do we actually have? What is Starbucks telling me about price action, right? We're trading above the 200, which in and of itself is kind of bullish, but you can see we have been like a Ginsu knife, just chopping up that 200, and we're in chop. So as far as my thoughts on Starbucks for now, I'm going to leave it alone. It's arguably overbought. it's really much more at significant resistance than it is a buy for me, right? Choppy market, really not that important if it's above or below the 200 because it really hasn't proven to be a launch. And there's no trend here. So I would say there's arguably an overbought setup here. But I will say I don't really have my my laser beams, if you will, on Starbucks. I'm far more interested in heavier weighted names and then playing probably the sectors. Of course, Starbucks being in the XLY, which I would be far more interested in playing as long as Amazon and Tesla are moving higher. All right, let's jump into some of our questions from the training room. All right, Mark asks, is there an expectation that the NQ rebalance will drop the price of any of the Magnificent 7-8? Already has, Mark. Yeah, it already has. Yes. So the simple answer is yes. And the second part of that is it already has. Yes, absolutely. And by the end of today, July 21, that rebalancing will be complete, the new weightings. And then come Monday, we're looking at that brand new construction of the NAS, which really isn't brand new because we're still looking at a disproportionate weighting of those big name stocks, just not as disproportionate as it once was. Again, you can check out the YouTube video over at Simpler Trading's YouTube, where I walk through a 30-minute nice succinct discussion about not just the rebalancing, but why high concentration weighting is the way the market moves, and earnings and the implications for earnings as well. All right, next up is McVie asks, my clock covered the symbol that I was reviewing. Would I mind moving? I'm usually, whatever symbol's on the screen, McVie, is whatever I'm talking about, but sure. All right, next up, can we take a look at AFRM? All right, so let's see. AFRM. Let's look at the structure, right? So if I'm looking at AFRM on the daily, Freddie, the 200 continues to be resistance. It's not in a downtrend anymore. However, and that hasn't been since late March. So ultimately, when I have a stock that is under $20, what I will say, and this goes with anything under 20, ultimately, what we have is really more of a volume-based approach. For me, that means where are those volume ledges? Where is the point of control? Where has money moved in? And I would say money's moved in at about 10, 12 and a half, and right around 13, 13.20. That's where the size, right? If we're thinking to ourselves, always know the size. It's size based on price. It's price-based volume, right? So if anybody talks about, I'm following big money, I'm following banks, or I'm following funds, and they don't follow that up with volume, they ain't following any of those things, right? Price does not tell the story alone. So yes, price is important. Please, of course, no, that's the first of the four factors. But price plus volume, price-based volume, that's far more complete. We start to add time, we start to add volatility, and those are the four factors of the market. So when I look at this one, getting above 200 and staying above 200 will be very, very important. But right now, it's probably in a very thin area in terms of volume, Freddie. And I would say at a fatigue level, right? At a resistance level. Fatigue, resistance, supply, ceiling, sellers, they all mean the same thing, right? Some traders favor one wording than the other, but it's all the same thing. So that's the way I would look at that. All right, next up is, how about a long put on the XLU? So in terms of XLU, I got to tell you, I'm long XLU. I've got the 65 calls in XLU. So I'm probably the wrong person to ask about puts because, again, we all have to acknowledge where our biases are. It's really interesting. Yesterday, on Thursdays, I meet with the Trish boss here in the office. We talk about, what's next. By the way, while I'm thinking about that, on the 2nd of August, if you haven't already penciled it in, 7 a.m. that would probably be better for me. 7 p.m. Central, 8 p.m. Eastern, August 2. We're going to talk about a number of the things that I'm doing right now to, for example, B long XLU, which is a great trade. It's a 65 call. So why do we find these? How do we find these trades? Why am I taking the long side of certain things? What are the price levels that we look at, and why are those price levels relevant? How are we going to block the noise out of this current environment, right? I haven't seen an uptrend with so much pessimism in a very long time, right? Um, so how do we do those things? August 2, 8 p.m. Eastern. And so one of the things we were talking about, not to mention that webinar that we're going to be doing, which, by the way, I don't want there to be any confusion. I'm going to go over what we've been doing in the Sector Secrets Mastery, show you trade examples, show you why I'm making the decisions that I'm making based on the tools on my chart. And it's a $7 trial. So we do this very rarely. This will be the only one for the year. We will start that whole thing on August 2. So spend the month of August with me. It's going to be an immersion, and it's a great way to prepare for the fall. I love the way this is going to be allowing everyone to get a number of the tools that I use, and then go into September full steam ahead. So $7 trial at Sector Secrets Mastery. So, but definitely August 2, 8 p.m. You want to check it out. And that's where Lever, I'm already long XLU. So if I'm long, we were talking about cognitive biases yesterday. If I'm long, I know that the clarity of the short side is just not in my mind, right? Because we already scaled out at just in front of 66. We're looking to scale out again. And if we break the 200, if we're able to get above, say, 67.80 to 68, this is going to keep going. And I've got an August 18 call. So I still have plenty of time on the movement. But that being said, what could be your long put trigger is going to be my obstacle, maybe another target or resistance to the upside. Keep an eye on 67.80, right? So if you're thinking, okay, Rog, but I get that you're long, but where could we see resistance? That's exactly where we could see it. And notice how it's completely automated on my screen. Darvis 2.0, 200 propulsion, pretty much at the identical level. If we can't get above that, chances are that's where sellers, ceiling, supply, right? Resistance, whatever you want to call it, that's where it's likely going to be waiting. So I'd keep an eye on that. All right. Stanley asks, Walmart. Sure. Stanley, Walmart is in a kind of lumpy, bumpy uptrend. Let me do this here. I'm going to take you on over to a layout that I love to use, because part of trading, for me is, and actually this is going to be a topic on the 2nd. So again, pencil it in, August 2, 8 p.m. What we trade is even more important than how we trade it. Say, wait a minute, Rock, strategy doesn't matter. Gang, we can do the right thing in the wrong stock. If I try to set up a buy in a downtrend, I don't care how perfectly I executed the call or the spread or whatever. If I put the wrong strategy to work in a right strategy to work in the wrong symbol, I'm not going to see the type of results that I want. So part of that is when I look at Walmart, I'm going to ask myself, Stanley, is that the best example of an uptrend or downtrend? And it's actually no. I'd be more bullish, by the way, Stanley, but if I'm going to be bullish in XLP, which is where Walmart hangs out in terms of high concentration weighting, Costco, Philip Morris, Archer, Daniel Midland. By the way, I would take the question earlier about corn. Matt, take a look at Archer, Daniel Midland. We might get better setups out of Deere and CAT and ADM, right, than we do maybe out of grain. So keep an eye on that. It's turned into an uptrend. If I'm bearish, Estee Lauder, right? So that's what I mean about watch list building. If you get that part right, it's amazing how much easier trading can be. All right. Okay, gang. And just like that, boy, that 20 minutes flies by. Thank you for the awesome questions. I will talk with you all on Sunday, 6 p.m. for our top tier market outlook. And by the way, we have a newsletter by the same name, Top Tier Outlook. And that is included with the trial package coming up on August 2. And of course, our Sector Secrets Mastery folks get that included with their subscription. So try to put all the goodness in there to give you everything you need to manage all sorts of time frames. All right, speaking of time frames, Sector Secrets folks, I'll see you in the morning for our day trades. We'll take a look at our long QQQ position from yesterday, KRE, XLU, and whatever questions you might have. Be good to each other, gang. I'll see you Sunday.